Bitcoin can be grouped into three aspects. The first one sees Bitcoin from the perspective of a protocol or set of rules that states how the Bitcoin network should be operated. From the second perspective, Bitcoin is seen as a software project that is involved in implementing the earlier mentioned protocols. Finally, Bitcoin is seen as a network of devices and computers that are involved in running Bitcoin software. The software is the principal means of running the Bitcoin protocols and for the creation and management of the Bitcoin currency. Summarily, Bitcoin mining gets defined in form of protocols implemented by software, and it performs very essential functions in the management of the Bitcoin network. The Bitcoin mining process is based on transaction verifications and prevention of double spending. It is also involved in the collection of transaction fees and the creation of the money supply. Bitcoin mining piles tons of processing power on past transactions, thereby protecting the Bitcoin network. Bitcoin mining process has to do with transaction verification, which is done by simply evaluating these transactions in comparison to those transactions that had earlier occurred. Bitcoin transaction is designed in such a way that it cannot spend any Bitcoin that had been spent earlier or that is yet to be created. Individuals spending Bitcoin also need to send their Bitcoins to specific and valid Bitcoin addresses. They also have to adhere to all the rules that are defined by the Bitcoin protocols. The Bitcoin mining process has a frequency targeted at every 10 minutes as hinted earlier due to frequent failure during new block creation. The mining process is, therefore, able to create a new block using the latest transaction as template. It also produces the exact quantity of Bitcoins that is defined by the present blockchain reward. Bitcoin miners equally verify the blocks that are produced by other set of miners, and this ensures the entire Bitcoin mining process continues to build on the blockchain. It is difficult to mine Bitcoin block, and this is due to the fact that the SHA-256 hash of the block's header needs to be equal to or lower than the expected target for the block to be counted acceptable by the Bitcoin network. It is, however, possible to simplify this problem. It is essential of the hash of a block to begin with a particular number of zeros. It is, however, a very difficult endeavor to calculate a hash that begins with such number of zeros. This means the person making the calculation needs to make several attempts at it. Incrementing a nonce can help in generating a new hash in each round. As many people join the Bitcoin mining, there is going to be increase in the rate of block creation. As there is rise in the rate of blocks that are generated, there is rise in the difficult, and this will compensate and also push down the rate back to where it was earlier. Every block generated needs to meet a certain difficulty target. Meeting this target is not difficult if the block generation is done following the laid down rule. However, block creation via malicious means will culminate to blocks that are unable to meet the required difficulty target. Such blocks are automatically rejected by all individuals on the Bitcoin network, making the malicious Bitcoin to be rendered worthless. It must be stated also that Bitcoin mining is a completely legal process. It involves running SHA-256 double round hash verification process so as to get Bitcoin transactions validated and to also provide all the required security for the Bitcoin network's public ledger.